Ladies and gentlemen, good day and welcome to the Kumar Infraprojects Q1 FY23 earnings conference call hosted by Anand Rathi Shares and Stock Brokers. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Meet Parekh. Thank you and over to you, sir.
Thank you, Seema. On behalf of Anand Rathi Shares and Stock Brokers, I welcome everyone to the Q1 FY23 earnings call for Kumar Infraprojects Limited. From the management side, we have Mr. Kamal Gupta, Managing Director, Dr. Nalin Gupta, Managing Director, Mr. Madan Biyani, CFO, and Mr. Arvind Gupta, VP Taxation. We will start with the opening remarks from the management regarding the industry, the result, post which we will open up for an interactive Q&A. Over to you, sir.
Yeah, good afternoon, everyone. This is Kamal Gupta. On behalf of Kumar, I welcome everyone to the Q1 FY23 earnings call of the company. Joining me on this is Mr. Nalin Gupta, MD, Mr. Madan Biyani, CFO, Mr. Arvind Gupta, VP Taxation, and our IR team. I hope everyone had an opportunity to look at our results. The presentation and press release have been uploaded on the stock exchanges and our company's website. Before I begin the overview, a brief disclaimer. The presentation which we have uploaded on the stock exchange and our website, including the discussions during this call, contains certain forward-looking statements concerning Kumar Infraprojects business prospects and profitability, which are subject to several risks and uncertainties, and the actual results could materially differ from those in such forward-looking statements. Well, we are excited to deliver another quarter of healthy performance of Kumar with stable operating margins and debt levels. We are witnessing strong execution momentum across all our projects and are focused to create a value for all our stakeholders. We are witnessing pickup in new projects awarding. FY23 has started on a positive note with projects awarded to the tune of 1,374 crores this fiscal year. Some key updates. We are awarded projects from IRCON amounting to 1,068 crores excluding GST in Q1 of FY23. This is part of the Delhi-Mumbai corridor. It's a spur from Vadodara to JNPT, package 17. The total project length is 9.8 kilometers, wherein 4.2 kilometers is a tunnel portion. It's a 4+4 8-lane access controlled highway with twin tube of tunnels. The second project which was awarded to us is a sewage tunnel project in Mumbai by BMC, MCGM from Don Bosco to Malad, amounting to 510 crores excluding GST, which is in JVA, wherein Kumar share is 306 crores in Q2 of FY23 this year. Coming to the financial highlights of Q1 FY23, the revenue from operations for Q1 FY23 grew by 47% to 994 crores as compared to 675 crores in the preceding year of Q1 FY22. The operating margin EBITDA for Q1 FY23 stood at 140 crores as compared to 97 crores in Q1 of the preceding year, 22. EBITDA margin stands at 14.1%. The PAT for Q1 FY23 has gone up by 93% to 62 crores as compared to 32 crores of Q1 FY22. PAT margins for Q1 stood at 6.2% as compared to 4.8% in the preceding year. The company continued its focus on working capital management and good quality of work and good order book. Our total order book as on 30th June 22 stands at 12,095 crores. The order book entirely includes metro projects contributing almost 57%, while flyover bridges and road projects contributes around 35%. We remain optimistic on Indian recovery amidst the continuing global geopolitical uncertainty. Before taking the question and answers, I would like to repeat the vision of the company. Kumar's vision is to be a $1 billion revenue company by year 27, and we expect our order book to go about 20,000 crores by 27, sir. With strong financial and technical merits, we envisage becoming one revenue revenue company by 27, of course. Our endeavor is to reduce gross debt level in medium term. Objective is to continuously improve shareholders' return ratio by investing in people, technology, and process. Thank you so much. Now we'll wait for the question and answers, please.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Mohit Kumar from DAM Capital. Please go ahead, sir.
Yeah. Good evening, sir, and congratulations on a fantastic set of numbers. So my first question is, given the stupendous, given the high growth in the first quarter, is there any upside risk to our guidance in the sense we have given 15% guidance, it's come to 40 billion for the entire year? Do you think that numbers can be revised upwards?
So, hi Mohit. Of course, as we always believe in giving a conservative figure, but Q2 of course is sluggish because of rain, as you know, and this year, in July we had very good rain. So our figure for 4,000 crores as on for the coming fiscal year 23 stands to be good, and if we are able to do better, of course we are ready for that. As this quarter we could do better than MSI. So we believe giving a conservative figure.
Understood, sir. So you think there are upsides, but yeah. So my second question is on the, of course, if we have done the EBITDA margin were steady at 14.3%. Do you think what was the impact of inflation during this quarter, and do you think the easing inflation scenario environment will make it easier for us to have a better margin in the next 3 quarters, or do you think our margins are neutral to the inflation?
So if you are aware, Mohit, last couple of quarters, the rate of all commodities have really gone up, shooted up to the sky. Okay, so because of that also, there was no impact on the bottom line, and if there's some drop also, there won't be any impact on the bottom line since all our projects are covered with price escalation and variation clause. So we are full and sure that we'll be able to maintain this 14%, 15% EBITDA margin what we have given guidance in.
Understood, sir. Lastly, sir, how is the order environment outlook, especially in Metro and in Mumbai area or MMR area for next 8 months? Where is GMLR, the project right now? Do you think it can get awarded in this fiscal?
So from Metro sector, hi Mohit, this is Nalin here. So Metro, there is huge opportunity that we are seeing all across the country. And currently also in Bombay also package 10, 11, 12, 3 and also package 13. There are 3 to 4 packages which has been already approved in DPR, and also the GC tenders has been, the price bid has been opened. So it is very likely that in next 3 to
That's it from my side. Thank you.
Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. We take the next question from the line of Vignesh Iyer from Sequent Investments. Please go ahead, sir.
Congratulations on a good set of numbers. I just wanted to ask, after in case of Mumbai Metro, after the metro set, RA has been cleared for construction. What is the movement when it comes to the new tenders floated for the other metros, and what is our participation rate when it comes to these tenders? You could give us an idea.
So if you talk of RA metro station, RA depot, that was a specific depot only dedicated to line 3. And all the other packages related to line 3 has already been floated, and the work is on advanced stage of completion. Like J. Kumar, we have 2 packages and 85% work has already been completed of our 2 packages. So by December 23 is what we expect that all the civil work should be over, and this would be only related to Metro Line 3. And when you talk of other packages, they all have their different depots in different vicinities. So most like 2A and 7, they have a different depot at Malwani. Again, line 2B has a depot at Mankur. So on, there are different depots. So RA has nothing to do with the other metro lines. And as we already mentioned that there are around 4 metro lines. Metro line 5 is, there is an underground section which is coming up. Metro line 10, 11, 12, 13. So there are altogether 5 lines which will be seeing the tendering process to happen in a couple of months from now.
Okay. No, it was more like after the current government coming up, is there any escalation when it comes to the metro project? That was my point of view to ask, as in overall.
If you look at Metro Line 3, as soon as the new government came in, you can see the acceleration at RA depot, and also the other metro lines has been told to be given full pace, and whatever clearances are there, they have been given a good push. So the clearances are happening better. The government is pro to metro. So we are seeing that the operations are getting more smoother.
Oh, okay. Yeah, right. Also, coming to the margin part of our business, so if you could see that pre-COVID level, we were consistently hitting around 16% margins for a few years, even 18%. And so I just want to know what is the company's outlook on it, as in can we get back to those levels, because we are seeing good amount of traction when it comes to top line. So just if you could give us an idea. Because we have pre-COVID consistently maintained around 16% for 2-3 years.
So we have been giving a guidance of around 14 to 15% for our EBITDA margins. And if you look at the EBITDA that the company has been making for last couple of years, it has been in the band of 14 to 15 only. So we have never given a guidance for 18%, and as the base increases and your company keeps growing, still to maintain a EBITDA of 14 to 15%, I think it's a good set of numbers that the company is targeting and we are able to achieve. So I would say that 14 to 15 is the guidance that we should be looking at.
Okay.
There is scope for improvement, and we always strive for achieving the same. But to have a fair idea and to give a fair guidance, we would say 14 to 15% is a fair number.
Okay, fine. And coming to this project, like a non-metro project that gets offered, just wanted to know in general, what is there price variation, as part of the contract? Because the prices of raw material has been fluctuating a lot in past 1 year. So just wanted to know what is the idea then?
So Jignesh, whether it's metro or non-metro, the situation is same. So all of our projects, 100% of our projects are covered with price escalation and variation clause. Okay, and these are linked with the RBI indices. So if the commodity price goes up, the RBI indices goes up. If the commodity prices goes down, the RBI indices goes down. So whether it's cement, steel, fuel, labor, PNM or other commodities, it's all are linked with our price escalation clause. So any increase or decrease does not hit our bottom line. So whether it's metro or non-metro projects.
Okay. Yeah. Got it. All the best, sir, and that's all from my side. Thank you.
Thank you so much, Ignish.
Thank you, sir. We take the next question from the
मेरा
line.
नाम विघ्नेश है, विघ्नेश बोल रहा है. क्या बोले आप?
Hello.
Mr. Bhavik, your line is in talk mode, sir. Please go ahead with your question.
Yeah. Hello. Hi. Thanks for the opportunity. So I just wanted to understand the margin profiles of the two orders that we have received, the expressway project and the sewage project. And like, how is it different from one another? Which one have better margins?
So, Bhavesh, of course, we don't work without bottom line. So our focus is always on profitable growth and not on the top line. You know, as you must be seeing our previous history also. So both these projects have been secured 14 to 15% operating margins, and we are sure, till the time it comes, it may go percent up or down, but it's have been secured 14 to 15% margin, both the projects.
Okay, sir. Okay, yeah. Thank you. That's from my side.
And both are USP jobs of specialized operations. Let it be this drill and blast tunnel of road work, or you talk of the PST tunnel, which is a smaller dia TBM with segment lining. So both are specialized jobs.
Right, sir. Thank you.
Thank you.
Thank you, sir. We take the next question from the line of Alok Devra from Motilal Oswal. Please go ahead, sir.
Good afternoon, sir. Just a couple of questions. Sir, what's the order inflow target we have for this year? Actually, I missed that number in case you have.
Yeah. So, Alok, we have, last year, we had order inflow of 3,670 crores. And this year, this fiscal itself, we had an inflow of 1,375 crores. And we are targeting around 5,000 crores inflow for this current fiscal 23. Thereby maintaining our 12 to 13,000 crores of order book always.
Right. And also, sir, this expressway project of which you have won in 1Q, this has been won by IRCON, I think, on HAM basis, right?
You are right, Alok. This project has been taken by IRCON from NHA on HAM basis.
Right.
And we are the main contractor for it. They are the developer and we are the main contractor.
Got it. So does that mean this will start after 8-10 months? Because typically, because I think it's awarded to them in May or sometime that time. So it will take its own financial closure and appointed date, and all those 8-10 months will go in that. So
yeah, so you're right. Initial 6 months are usually taken for that. So we are expecting the appointed date from 1st of October in this. But we have already started the work there. We have started our survey, mobilization, and all are already started. So we save that much time, and probably we are looking for bonus in that project. So, we want to do some work before the appointed date.
Sure. And what's the timeline for this?
So this is for 36 months.
Okay.
The project
vertical which the company has started. So there are a lot of riverfront development work that's happening in Gujarat and in Maharashtra. And there are further similar riverfronts work which are going to come up in Pune city itself. So these are the new verticals, though we do not intend to, basically forget to divert majorly from our prime sector of transportation, which is itself a niche area of expertise of elevated underground metros and bigger, size of flyovers and road projects of NH.
Sorry to interrupt, sir. It seems that the line from Mr. Bhavik has just got dropped.
Okay.
Okay, so we take
We
the
can
next
connect
question.
to somebody else, yeah?
Yes, sir. We take the next question from the line of
Can take the
Mr.
next
Vipul Kumar Shah from Sumangal Investments. Please go ahead, sir.
Hi, sir. Congratulations for a good set of numbers. My question is on the strength of our balance sheet, what can be the maximum size of our order book? Means can we reach 20,000 crores of order book on this balance sheet size, or our balance sheet is preventing us from bidding higher quantity projects?
So, Mr. Vipul, right now the balance sheet and the capacity, the financial, status of J. Kumar entitles us to go up till 20,000 crore also without any limitations. However, it totally depends upon the nature of work, what type of capex or what type of new type of works or in which geography you are taking up the work. But with the given scenario, shooting up the order book up to 20,000 crore, also without, with the same balance sheet, we should be very much comfortable.
Okay, sir. And sir, are the margins different for road and flyover segments and metro segments, or margins are almost same across all the segments?
So we don't take much of road work alone. So, roads are part of the major structure work. Like we are doing this Dwarka Expressway, which is almost 3,000 crores of project. And wherein the road component is only 10 or 12%. So, of course, road is there, but we don't do only road, So, as coming to the margin,
JNPT is also similar. If you look at our JNPT, which is a project of more than 1,500 crores, there also it's a combination of concrete road with slip form paver. Again, it's not a normal PQC, but with a slip form paver. And along with big interchange, clover leaf, flyover. So, those sort of works are not everyone's baby to execute. All the agencies who are doing road work cannot do such type of flyovers. So whenever structure is involved, we try to pick up those type of work.
So coming to the margins of whether it's a metro or flyover or channel, the margin, what we quote, it's basically what you quote and get the work at, what is your working. So we don't quote any projects without a 14 or 15% of EBITDA margin. So all our projects of this mix is are always secured 14 to 15% margin.
Okay, sir. Thank you and all the best. Yeah.
Thank you, Vipul.
Thank you very much. We take the next question from the line of Panjul Agarwal from Green Portfolio Private Limited. Please go ahead.
There is a reduction of around 55% in administrative and other expenses in this quarter compared to previous quarter. So could you please throw some light on the reasons?
One sec, Sanjeev. So this was, Mr. Madan, our CFO is replying. Yeah.
Yeah, hi. This is because in this quarter, we have regrouped our expenses into construction expenses and other expenses. So now other expenses become just administrative nature, and construction expenses mainly services which are required for our construction project. So this is for better presentation of our P&L.
So I do understand. I'm talking about the numbers presented. You've also restated the numbers for the previous quarter, right? So
yes,
that.
Yeah, we have regrouped all the quarters to make them comparable.
And we have went from 200 lakh to 995 lakh in this quarter.
Which number are you talking about? 995?
You are referring the results?
Yeah.
Just page 995. That is 9 crore 95 lakhs administrative other expenses. Yeah. So earlier that was 104 crores of construction expenses plus 9 crore expenses. So earlier it was 115 crore. Now it has been split into two items: construction expenses and other expenses. And similarly for all the previous quarters and years.
Yes, sir. So what I'm saying is, if we compare the administrative and other expenses, for quarter ending 31st March, it is around 2200 lakhs, and for quarter ending 30th June, it is 995 lakhs. So there is a drop of 55%. That is quite substantial.
Yeah, so if you look at, there is one important thing that I would like to highlight here, that there is a total cost of 100. So out of 100, if you see the material component, has gone up a little bit higher as compared to the administrative and other expenses. So in certain quarters, you can see the material going up and the administrative cost and other expenses going down, depending upon whether more material is consumed or it is more of less labor material oriented or more material oriented. So that percentage changes, and still the 100 percentage still remains the same. So here the material component has gone up and the other component has still remained on the lower side.
So if you see, Prinjal, quarter ending 30th June 21, the administrative expenses were only 12 crores. So, it's on a quarter there means slight changes, and overall it's around 60 crores for the year end.
Okay. So just could you please check mobilization advance, retention money and unbilled revenue for this quarter?
Yes, ma'am. You want the mobilization advance, unbilled revenue?
Mobilization advance is 557 crores is the mobilization advance.
557 crores is the mobilization as on today?
And unbilled revenue is 545 crores.
545 crores is the unbilled revenue, madam.
No.
Is that good?
Hello?
Hello? Yeah, Panji, can you hear us?
I can hear you. So the retention money amount?
This is 220 crores.
220 crores.
Okay, so one last question. Could you please share me the details of some slow-moving projects which are there for over 4 years now?
Come back, sorry. Can you come back, madam?
Any slow-moving projects which are ongoing for over 4 years now?
No, none of the projects which are going from 4 years. Of course, this Metro Line 3, which is 85% completed. The contract period was only 4.5 years. So it's, of course, more than 4 years, and we are planning to complete it by next year. So there is no project which is slow-moving apart from one project of Sidco Coastal Road, of course, which was awaiting environmental clearance, but that's 480 crores only. So that is a project which is yet to start. Rest all projects are going in full swing, madam.
So there is the tenure maybe more than 4 years for execution because we are working in urban areas, but that's not slow moving.
Okay. So sir, when can we expect the Sidco Coastal project to start? It is not yet started.
So we are expecting this to start by November, mid of October in this year.
Okay. Thank you, sir. That's all from my side.
Thank you so much, Manju.
Thank you, ma'am. We take the next question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. First of all, congratulations on robust performance. Before asking a question, sir, just wanted a clarification. Does our order book till third quarter of FY22 was inclusive of GST? So whatever the numbers we have shared in the presentation, also the second last page, that is the 42 number page. So till FY18, 19, 20, 21, all these order book numbers were inclusive of GST?
No, Shravan. So these all projects were excluding GST.
Earlier, the numbers that we were sharing was with GST, but currently the numbers that we have given for March is excluding GST. And even the FY23 number of 1,375 crores above the order book that we are talking of is also again without GST.
Hello.
Order book of 12,095 and this 1,375 crores Q1 order that we are speaking of, financial year 23 order,
Sorry, sir. Hello.
Hello. Hello. Yeah, Shravan, you can speak. Hello.
So it just got dropped off, sir.
Okay. So we can take the next question, please.
Sure. We take the next question from the line of Parvez Akhtar from Edelweiss Securities. Please go ahead, sir.
Hi. Thanks for taking my question. So a couple of questions from my side. First, it would be great if you could give us some update about some of our major projects like you already mentioned about line 3, it is 85% complete. So if you could tell us about some of the other metro lines that we are doing in Mumbai, like line 2, line 9, line 6, and also the Pune and the Surat metro project.
Yeah, so Parvez, if you talk of line 2A, that's around 99% it's completed from our side. So it's only the other ancillary works from various electrical and the traction people who are doing the job, and it should be put into operation by say around November. And if we talk of 2B, we have already completed 12%, 85% is line 3, line 4 is around 42% completed, line 6 is around 60%, line 7 is around 97%, and line 9 has been completed by around 24%. This Pune Metro, we have already completed around 80%, and Surat Metro, it's around 4%.
Okay, great. And when do we expect work to start?
Work to? Yeah, sorry, Parvez, I think your line got dropped.
Hello? Yes, sir, his line got dropped off.
Some issues with the network or something like that. You can connect him back. Madam?
Sure, sir. I'll get him back on the call. I'm promoting the next question, sir. This is from the line of Mohit Kumar from DAM Capital. Please go ahead, Mr. Kumar.
Hi, sir. One clarification. Sir, you have this contract with Econ. Under this EPC agreement, is this like a proper price variation escalation clause, or it's a fixed price, or there's only partial variation? Because given the HAM contract, I'm asking this particular question.
Yeah, so this is like absolutely a EPC contract what we do with NHAI. It is on the same terms and conditions with all price escalation clauses, bonus, everything. So there is no change in the document what we do with NHAI. Absolutely the same document, same contract. So it's your EPC contract with all the conditions similar to what is there in NHAI.
If I'm not wrong, I think Econ had a couple of more contracts open. Are we interested in those particular contracts also, or do?
So if it is of our choice, like of our niche area, of course we'll go for it.
Okay, understood. So there's nothing open at this point of time, nothing under consideration. Is the right understanding?
So right now, nothing we are putting with them. If any contract comes of our size and our liking, of course we'll go for it.
Understood, sir. Thank you.
Thank you.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone phone. We take the follow-up question from the line of Parvez Akhtar from Edelweiss Securities. Please go ahead, sir.
Hi. Thanks for the follow-up. Just 2 data points that I needed. One is what is the cash and bank balance that we have, including FDR? And second is what is the capex that we have done in Q1, and what is our target for the full year? Thank you.
So when for the capex, Parvez, we were targeting around 100 crore to 125 crore that we had mentioned, but we would like to revise it to 125 crores to 150 crore for this year, which will be basically due to the addition of the 8 TBM that we wanted for Delhi Metro, looking at the geological strata that we are facing there. So that's and for the till now for Q1 we have done around 31 crore is what we have done for Q1, and we expect around 125 to 150 crore for capex at the annual level. And with regards to the numbers, you can say that.
The cash and bank balances stand at total 139 crore as at the quarter end. including the escrow accounts and other bank balance and all. And FDR's fixed deposits stand at 384 crores as at the quarter end.
Thanks and all the best for you.
Thank you, Parvez.
Thank you, sir. A reminder to all the participants, if you wish to ask a question, you may press star and 1 on your phone. We take the next question from the line of Krishna Agarwal from Nimeshai. Please go ahead.
Number on the side, what is the execution period of our current order book? And second, just a clarification as to why our sales degrown QOQ, like it has degrown 10%, 11%. Is that the nature of the...
Sorry, Krishna. The second question is not understood.
Hello?
Yes,
Hello.
please go ahead with the second question, ma'am.
My second question is, what caused the revenue to fall QOQ, like it has fallen 11%? Is that the nature of the industry, like in Q1 it usually goes down, or what?
So coming to your second question first is, I think you are asking why the Q1 is going down, right?
Q1, Q4 and Q1 comparison. Like,
oh yeah, so
Q4
is always the best in the industry, like that's the fourth quarter, and Q1 is also good, no doubt, and like Q2 will be sluggish, and Q3 will be better than Q2. Balance. So Q1 and Q3 can be considered almost the same.
You want the figures for Q4 and Q1?
No, why?
What?
Sorry? To the seasonal thing, if you are asking of why there are, about the numbers. Like Q2 is the worst quarter of the year for any infra company.
And Q1 also, the rain starts, since they're working in the urban area, and there is slight, the laborers go for the farming and all just before the, in Q1. So Q1 is slightly lesser than the Q4, always.
Oh. And what is the order book execution period, sir?
That is, for this, our current order book of 12,000 crores, execution period is around 3 years.
3 to 4 years is average, you can say.
Okay.
Krishna, is your question answered?
Yeah, thank you.
Thank you, ma'am. We take the next question from the line of Meet Parak from Anand Rathi. Please go ahead, sir.
Yeah, thank you for the opportunity, sir. Yeah, I had a few questions. Firstly, on the water projects, in terms of now that we have secured these sewage in Mumbai, do you look at other opportunities? Which other opportunities are we looking at? And any near-term opportunities which we are going to bid for? So on that, if you can highlight some points.
So there is a, like for the water treatment, like there are WTPs and STPs both that we are targeting. Like Surat has come up with an STP project of around 800 crores. And there are water pipeline projects that have come up under the Pradhan Mantri Jal Yojana. So in that, like UP, MP, all the states, they have huge packages that's coming up for end-to-end pipeline projects for which we are targeting. And also WTP and STP currently that we are focusing is already existing. And PST, which is sewerage projects, that also we have already backed 2 packages. One was for Miti and the other was for the Dharavi project, of the Malad project. So there are similar type of projects also expected again from Bombay Municipal Corporation and Pune. So we are trying to focus on that as well.
Also, CIDCO is coming out with this water tunnel, so we are focusing on that as well. So maybe in another 3 to 6 months, they will float the tenders.
Sir, what will be the size of the CIDCO project? This
will be around 500 to 1,000 crores each.
Around 1,000 to 1,100 crores is, they are coming up with 2 packages.
Okay, sir. Okay. Thank you so much.
Thank you.
Thank you, sir. We take the next question from the line of Vipul Kumar Shah from Sumangal Investment. Please go ahead, sir.
Hi, sir. So we have 7 TBM. So just trying to understand why we have ordered one more. We could have shifted TBM to the Delhi side. So just trying to understand that.
So the geology of Delhi, it requires 4 tunnel boring machines, out of which we have utilized 3 machines we are taking from, 3 machines we are taking from the same Mumbai and Delhi project, and 1 machine which is like we have 3 rock TBM. So right now the usage, we have already 7 machines are in already been assigned, out of which 2 is working for Surat, 2 is working for Mumbai. So Mumbai, what we are using is the EPB machine, and Surat is again EPB. And we have 1 machine which is left out as the rock machine, and we require 1 EPB machine in Delhi again. So 2 machines we could utilize from the existing, and 1 we had no other option, because the stretch between Vasant Kunj to Kishangarh is having a varied type of strata, ranging from EPB machine requirement, which is for soil, to open type of TBM, which is for rock. So we had no other choice but to get 1 machine new brand, and the strata over there is very good. Encounter the hard strata is very, very hard. So we had to go for the new TBM for that location.
So we are already utilizing all our 7 TBM, plus we require this 1 additional. So it's not that we are not utilizing our additional. All the TBMs, existing TBMs are put to use, and then this is the additional requirement.
Okay, sir. Thank you.
Thank you, sir. A reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone phone. We take the next follow-up question from the line of Shravan Shah from Dolat Capital. Please go ahead, sir.
Sorry, sir. Previously, my line got disconnected. Sir, just continuing the same question. So, till 3rd quarter of FY22, we used to report order book inclusive of GST, and from the 4th quarter, we started reporting exclusive of GST. Is the understanding right?
You are right, Shravan.
So is it possible to restate the FY21, 2019 order book number exclusive of GST to make sure the one have the better comparison?
Shravan, do you really feel it will make any difference? Because right now the current order book, that we need to talk about the current order book, which is already reinstated without GST. So now you have the net of figures without GST for at 30th June 2022 level. So earlier figures, I don't think we don't have the numbers though, but we can do if you want. But I don't think it would make any difference to the current order book status that we have given, excluding GST.
We will ask Mr. Madan Biyani will give you the details. No problem.
Okay. And then second, in this quarter, how much change in scope or increase in scope that we have taken in the order book?
Nothing. In the current order, the 1,375 crore order book that we are mentioning, that we have backed in FY23, is not including any of the variation. It is purely for the 2 new contracts.
No. I'm talking about the existing total order book, 12,000 odd crore that we have. So in that, in this quarter, have we taken any price increase?
Yes.
Which you're talking about some variation, what we get additional work?
Yeah. So increase in scope of work because of the price variation.
And so we do add, like we will let you know, the total in the last quarter, probably, year end, for the whole year, yeah.
Okay. I need a couple of balance sheet numbers, sir. For what's the inventory, debtor, and trade payable as on June?
Yeah, one second. Mr. Madan is
the inventory is 369 crores, and trade payable is 524 crores.
And debtors, trade receivable?
Is 907 crores.
997. Okay, so it's
907.
907.
Yeah.
Okay, 907.
Thank you, Shravan.
Sir, okay. Sir, lastly, in terms of just on the broader bid pipeline. So two things. One, have we bidded any projects where outcome price bid have we submitted where the outcome is yet to come?
So it is in the process. We are in the process of bidding around 30,000 crores of projects all over India. But there are no projects which the outcomes are there. It's on the process of submission. So probably after the next quarter,
we have submitted the RFQ for 6,000 crore of GMLR.
Okay. Thank you, and all the best.
Thank you.
Thank you, sir. Ladies and gentlemen, that was the last question for the day. I hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Well, I would like to thank once again to all of you for joining us on this call today. We hope we have been able to answer your queries. Please feel free to reach out to our CFO or IR team for any clarifications or feedback. Thank you so much all. Thank you.
Thank you, sir.
Thank you. On behalf of Anand Rathi Share and Stock Brokers, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.